All right. It's been a minute. Welcome back, everyone. I hope you've been having a phenomenal time, and I hope you've been learning a lot too. I've got a lot to share. I'm not going to share all of it because that'd be way too long of a video, but it's good to be back. I wanted to pop in here because I finally got my microphone fixed, and it's time to make another video. It's time to reconnect and get back into trading and streaming both. So let's go ahead and get started here. We're gonna take a look at our the charts, and I'm gonna go through a couple of things. I'm gonna think through what's gonna happen this week, talk through what I think is gonna happen this week, and then also talk through something that I learned that has really leveled up my trading by a ton. It's made me a profitable trader, and it's slowly but surely something that I can kind of take in and use to build my portfolio while I'm still working the 9 to 5 job. So let's go ahead and head over to the charts, and we're going to talk through a little bit of what's going to happen this week, as well as what I've learned so far. So let's head over here. All right, so on the weekly charts here, so just for this week, right? So we'll focus on what we see. So I have the weekly chart over here. You can kind of see it over here, a daily chart, and then you start to get down into the 4-hour chart here. You can't see it. There's another 1-hour chart. There's a 49-inch screen up here, but that's okay. We only care about the weekly and daily currently. So if we take a look at the weekly and daily, we know that there's nothing really much to the left here. We've already come across and like blown above that. So right now, oops, what's going on here? Right now, that market is indeed quite bullish, and you can see we've taken out the highs here, right? So what we want to see, or what I'm anticipating this week, because next week we have FOMC on Wednesday, I'm anticipating a week where we go up, we go down, we go up, we go down, but we maintain around what? This new week opening gap. This is what I'm expecting this week. This is what I would like to generally see prior to an FOMC. I anticipate many relative equal highs being formed, relative equal lows. There's already one down here that we blew through on yesterday's candle. So from a weekly perspective, I was expecting us to come into this daily buy-side imbalance, but from a weekly perspective, I'm wondering if this stays open or if FOMC drops it down here briefly and then we head higher. So generally, we see a lot more liquidity areas beneath us, but there's no guarantee that we'll come back down to tackle those if the underlying market itself is quite bullish. So we're going to assume that it's bullish until we see otherwise, until we start to see weekly short-term lows violated with like a large weekly displacement. Then we can start to look for 20, 30, 40%. Generally 20 to 30% retracements is going to be key in this sort of bullish market. So from a weekly perspective, focusing a lot more on the higher time frame here on the weekly and daily charts is going to really up your game. So it's much easier to I can't tell you how many people have said this, but it is so much easier to identify where are the pockets of liquidity on the daily and weekly and sometimes even monthly and 3-monthly charts. Where are the pockets of liquidity that you can just zone in on and say, hey, these are my areas of liquidity, right? So you're going to want to really focus in on those. And this is something that, as simple as it seems, I spent a lot of time studying what happens on the weekly chart, what happens on the daily chart, how do things react to those levels, key highs and lows across the past 3 days, 3 weeks, 3 months. So things of that nature, right? So if you're an ICT trader, you're probably aware of the IPTA data ranges. So I do keep those on my charts. But generally, as a day trader, I'm looking at what's happening day to day. So from a daily perspective, I do like to find where is the daily liquidity, which hasn't been taken yet. Do I see, and frame it in such a way that where I say to myself, can I visualize a play going towards that area of liquidity? And that is really the underpinning of you determining your daily bias. So highly recommend spending a lot of time on the weekly charts, a lot of time on the daily charts. If you're not profitable yet, it'll get there. Just you have to spend time on those charts. Okay. So we're going to walk through a couple examples of how I have journaled and what I've looked at in the previous days. So to do that, what I want to do is I'm going to pull OBS over here so I can screen share my main deck here. And we are going to show you, I'm going to show you some journal entries. And what this means is this is how I journal. This is how you can consider journaling. This is how some of my mentors and friends have taught me over time. But we're going to, let's pull it up. Oh, let's pull it up over on this screen, actually. Okay, that's much better. All right, we're going to switch over to this screen here. We want the left one. Perfect. All right, so this right now, if I exit out of this, this is just a Google, a Google thing where I can create a PowerPoint presentation, right? So I'm going to move into slideshow mode, and this is just going to review a trade that we took, a couple trades that we took today. I'm going to frame out, this is one of the more icky days where I did not get to trade during the normal session, and I did not get to trade the major beneficial setup that I saw. But we're still going to talk through what I did, how you can journal as well, and how the plays that I was looking for, if I were fully paying attention. Now, this means that you can't really trade well if you're, finding a break in the day and attempting to force a trade here. Once you get a little better, you can identify where you are in the trade and determine whether or not you want to take that risk. However, until you get to that point, I write a brief paragraph about the day. I talk about what my emotions were beforehand, emotions during the trade, and emotions after the trade. And each of these is very, very important because this kind of grounds you and reminds you back to what happened during this trade. So I take a picture of my accounts. Yes, I am running Apex. I am running Apex accounts, and I'm running 20. So if you don't have 20, that's okay. Run 2 or 1, Just get to a point where you're able to start to extract some amount of money. You can see it's not a lot of money per account. It's maybe $70. Could be $20, at a time. 10 handles on NASDAQ. So this is the first slide that I take every single time. The next one is something where I take a look at what the actual rhythmic values are. So you can kind of see this is a screenshot, but I mean, I'll pull up actual rhythmic. You can tell this is the exact same thing here. You can tell that it's active here, and you can see my accounts. They're not very high yet, right? So they're only 600 some dollars above because I went on a tilt session at some point and I had to totally reset all of my accounts. I have some evaluations that I was working on, but those are ones that I got in super cheap and are still going on. So I'm working on this 1 or 2, from a sizing perspective, 1 or 2 micros at a time, and that's it. So that's how I'm building these accounts, because that's already 2 to 4% of the drawdown risk. So what do I look for? So this is how I sort of really roughly journal the day, the week, what I'm looking for, what could happen. I give myself indicators. Whenever I screenshot something, I always try to jot something down on top of it. I used to screenshot and just take the screenshot and try to save it in hopes that, hey, months, weeks, days later, I'd remember what happened. But ultimately, this sort of quick motion and drawing helps me helps me remember what happened on a digital perspective, so that I can then come back to it quickly, refer to it, and see what happened. So this is from a weekly daily perspective. Then I drop down to a 15-minute to give myself a kind of like a in retrospect sort of image of like, hey, if I were to have seen the perfect trade, if I were to have been a 100% attentive, zero distractions, what play would I have taken? And this is exactly the play that I would have taken. So targeting the daily buy side imbalance, relative equal lows, a raid on relative equal highs, lower highs, all the way through Asia, London, and then one raid in the New York Open, and then sell off 150 some points, right? I would have loved to be in this trade. I would have probably gotten out around these relative equal lows in this daily buy side imbalance. It did go to the consequent encroachment here, the midpoint. So this is one image that you should also take, where you're taking a look at what you would have, what's the most critical thing and best setup that you see. You want to screenshot those. Now, I went a little bit deeper into a 1 minute chart. You can see here that I've got the liquidity rate. I see it here. I pointed out very vividly. I see that the first presented fair value gap happened to be here. We from this entire range, we retraced about to the equilibrium, and then from there we sold off into and towards the new week opening gap, and then towards standard deviation swing projections. So I jot all these down, and you can see I marked every single one of them, even if I have a drawing that shows it, right? So again, similar thing where I saw certain things: first presented fair value gap, low risk sell side imbalance, buy side sell side inefficiency, sell side imbalance, buy side inefficiency, sorry, SIBI, and trading down. And also beyond here, later on the day, I wanted to sort of journal the afternoon session as well, because I want to get better at trading the afternoon session. And how am I going to do that? Well, I need to journal what happened, so that I can continue to see that, hey, this sort of situation occurred. Here's what patterns occurred. The actual trade itself today, so 2 trades, right? I had a quick scalp, knowing that we had a little room into this sell side imbalance that we could trade up into, but I didn't have enough time, as I was already in calls and I couldn't manage the trade. So I went into this scalp real quick, and then had to go to another meeting. So I took profit, I took a partial here, and then set my stop loss in profit, and obviously that got taken out. It's not an optimal entry. This entry right here is actually far more optimal for a long, because we have a breaker. We took out the daily buy side imbalance with this candle. We have a breaker, low, high, lower, low, displacement higher, return to that breaker high, and then a boost upwards. So entry on this breaker would have been far more beneficial, and that gave roughly 20, 40, almost 60 handles from there, even on a day where we had a massive downswing. So this was counter trend trading today. You can trade both ways. Any given day, there's generally, except for the days that it completely runs away, even those days have some retracements, but you can definitely trade both ways, but you need to wait for your setups. So knowing that I was targeting the daily buy side imbalance, I was looking for inefficiencies in the opposite direction to take a long. And ultimately, since I was long biased for the day, after having taken that daily imbalance, I was in meetings all day, and then eventually I can take a scalp during a break here as we are entering relative equal highs, and we're entering a sell side imbalance here. You can see those two limit exits. That's kind of what I was framing here. I was framing a return to optimal trade entry. So a lot of different things that you've probably gained exposure to as an ICT trader. But for me, this is what it looked like. So we'll get into some of the other trades. I had some other trades in the previous day, but that's for another time. So I just wanted to give you that sort of look on how I journal and how things have helped me build this account from some of the 50Ks that you saw. They were close to dead. Like they were really, really close to dead. I was trading horribly. I was trading impulsively. Um, I kept on having bouts of success and then bouts of really, really bad drawdown, and I just wasn't following the rules. So I got sick of it after a while. And so once I got sick of it, once I really sat down and focused on higher time frame to lower time frame analysis, I was able to now revive my accounts from less than $200 away. I think there was one that was $100 away from being blown to I think those accounts are something like about, oh, where is it? About 1,100 away from being blown just from trading 1 and 2 micros at a time. So if you can learn how to trade micros, I would highly recommend it if you're a break-even trader currently, or you are seeking consistency and you've seen some areas of success. Would highly recommend that you get really good at micros first. If you won't go back to demo trading because you've seen some success like me, well, what's your next best alternative? It's going with the lowest amount of leverage. So going with 1 micro or 2 micros maximum is going to help you build that skill set, help you build discipline, patience, and train that skill set until you can pass another account, until you can really stay disciplined in making sure that these firms which have trailing stop losses don't that you don't get bitten by the rules, right? Now, could I trade 1 mini and really parlay this up very quickly? Sure. In fact, I did that on 300Ks for quite some time, and then at some point I ended up tilting and losing entire like $9,000 across however many. I think I was probably copy trading 8 or so 300K accounts and just completely tilted and blew those. So definitely some rough times. I don't wish that upon anyone because it seriously makes you reconsider what you've been learning. It's not to say that what you've learned from ICT is bad. It's definitely very, very good and very, very sound. It's mastering yourself at the end of the day, mastering your distractions, mastering and knowing that you need to be concentrated in order to take a trade, or at least you need to be well prepared mentally, well in advance, knowing what your key levels are and what you might expect and what you're looking for at those key levels. Now, if you stayed here listening to what I said there, that's really the key there, is mapping out those daily, weekly levels so that you mentally and visibly, if you have them on your charts, can think, okay, well, it's reached this level or this new week opening gap or this new day opening gap, whatever it is that's on your chart as part of your model, looking for that and then looking for the play to unravel once it hits that key level. Doing that alone has really helped me greatly. So I think that that's something that many people are probably missing, myself included, who have had to work on this in order to be profitable. But yeah, I mean, I can only trade maybe 1 or 2 days a week, maybe less sometimes if I have to go into the office 3 or 4 days a week. Currently, I go into office 3 days a week, and it provides very little time for me to trade. So it's a slow grind. It's a very humbling move, but I'm very happy with where I'm at right now, and I'm going to continue to grow this account very slowly, 2% at a time, risking 2%, 4% at a time maximum. And yeah, I think the micros are allowing me to survive drawdown very, very gracefully. So hopefully you can do the same. I've come to terms that doing this with the 50Ks on Apex is probably still the best option. You can trade 150Ks if you really want to trade minis. The drawdown is a lot more lenient on that. So if you get a really nice sale, you can put in my code, Jonny, or someone else's code, doesn't really matter. just make sure you get the sale at the end of the day when they have an 80% off sale or 90% off sale. I would keep your eyes out for that. And everything's a little more expensive, so make sure you stash away a little bit more cash. But just FYI, from the previous months, me focusing on higher time frame draws on liquidity, and then framing the 15-minute draws on liquidity, and then executing on the 1 minute has been my jam. I found that that is really key. I do have multiple screens, so I can execute on the 15-second as well, but I found you really should only need the 1 minute, 15-minute, and then like the dailies and weeklies at the highest level. I do use the 4 hour and 1 hour as additional confluences, but I spend the majority of my time on weekly, daily, 15 minutes, and then execute on the 1 minute and 15-second if I missed a 1 minute one. So with that, I think, yeah, I think that's going to be it for today. I wanted to try and keep this as short as I can while still providing a lot of value based on like what I've learned in the past. But my model's been simplified greatly. I mean, I can tell you my model right now. So I look for Asia, power of 3. I look at what happened in Asia, what happened in London, where's the liquidity in each of those sessions, where's the liquidity in the previous 3 days, sessions, highs and lows. And I mark all of those out, and when the rest of the day unfolds, I just look to see what happened during those key levels. Did key liquidity get taken yet? Oh no. Was there relative equal highs, relative equal lows, liquidity waiting to get taken? Great. Let the play fan out, whether it's a long or a short. You're looking for either, if you're looking for a long, obviously look for relative equal lows to get taken out. Or if you're looking for a short, look for relative equal highs to get taken out. It's really that simple. I know that ICT, Michael's mentioned that it's internal range liquidity or external range liquidity, whichever one you use, that's totally fine. But simplify it to the point where you can focus on one model at a time and just backtest and see how many times does that happen every single day. There's multiple times when this sort of things happen, especially if you go down to the 15-second chart. But you don't need that. You can just use the 15-minute chart. If your work allows you to keep an eye on those, great. If not, you can look for a mobile. Maybe you have a mobile trading, and you can have Trading View on your iPhone or on your Android, and you can have it set an alarm when it passes those levels, so that at least you get a vibration, and in hopes that you can see it live, right? So with that, we're going to close up today. I don't know how frequently I'll be able to do these videos, but I do want to go in depth and really, really dial down one of the earlier days this past week, because there was a very interesting day, lots of really good trading, difficult trading, but maybe post FOMC we'll have a better idea if there's a rate cut or a stay the same rate, you know. Usually FOMC is a very tricky week, so I think next week's going to be very tricky in general. So with that, I think we're going to close up today. So great seeing you, everyone. I miss you. I miss streaming. I miss recording. I definitely would love to get back here if I can. Probably going to be like more over the weekend, sort of like sessions here. If there's anything that's been difficult for you, let me know. If you made it this far, thank you very much. I appreciate you, and I miss you, and I will hopefully get a chance to live stream at some point, but it's going to be tough in the near future, but definitely we'll look forward to doing that again soon. So with that, hope you trade safe, stay hydrated, and we'll talk to you soon. See ya.